Hello and welcome to this week's edition of Market Focus Fundamentals on the 5th of December 2011. Well, welcome back after another very erratic week on the markets. I guess the only place really to start is from last Wednesday's announcement after six of the central banks, including our very own Bank of England, announced a move aimed at boosting and lending to households and businesses alike. Banks also featured the ECB and the US Federal Reserve. They agreed to lower interest rates on US dollar loans, which should encourage lending and help stave off another credit crunch. Well, after a previous week's declines, we saw nearly 8 to 9 days declines, and obviously there were rumours of banks in Europe also skated on thin ice. I guess it was a case of desperate action calls for desperate measures, and this announcement was really a bit of a bolt out the blue, and resulting in a massive upswing across global bourses globally. Here in the UK, on the FTSE, we saw near enough a 3% an increase in terms of the FTSE, and it was the same likewise in the States with the Dow and S&P and the DAX and some of the other European bourses. So it's a bit of an adrenaline injection in the arm, to say the least, and we've sort of continued it today. It's a bit of a continuation, obviously, from Friday's unemployment report, which I'll actually just touch upon now. The surprising factor on Friday's report was the unemployment rate, which unexpectedly dropped to 8.6% in November. It was the lowest in 2.5 years, in fact, whilst unemployment growth accelerated in a further sign that the uneven recovery has regained some of its vigour. The market reaction obviously turned positive, but it was fairly muted on Friday. The S&P rose 0.8% to 1254, a high for the week, and almost into positive territory for the year. And that's quite, frankly, that's quite scary considering we were in bearish territory only a couple of weeks ago. Likewise, the Dow Jones Industrial Average also climbed 0.8% to around about 12,109. US employers added 120,000 jobs in November, according to the US Labour Department, against a medium of economists' expectations of around about 125,000 new positions. So figures for September and October were also revised higher to show an additional 72,000 workers were added to the payrolls. So some really, some uplifting news from the States also to add to the flurry of last Wednesday's announcement. And all in all, obviously, as you can see, it's made a healthy bounce on the markets, and a pretty significant bounce, which most of the markets now are really, looks like we're coming into more of a bullish type of trend, really, and whether we can call it a trend-changing significant announcement is another question on another day. But the bounce obviously was significant, and it certainly helped revive some of the declines we saw in previous weeks. Heading just for this week, the European Central Bank is expected to have some interesting meetings this week, and obviously the focus is going to be on Thursday's council meeting, which is likely to agree steps aimed at preventing a severe credit squeeze that will drive the Eurozone deeper into recession and averting acute problems at some of the individual banks, as I mentioned earlier. They will follow an intensification of tensions in the banking sector in recent weeks. And the ECB meeting in Frankfurt will act as a prelude to Eurozone's Leaders Summit, which starts in Brussels on Thursday evening. So by next weekend, an agreement on steps forward to a fiscal union could have paved the way for the ECB to provide more aggressive support for strained Eurozone government bond markets, which many economists believe is crucial to secure some of the Eurozone's future. So we've got an interesting few days ahead, especially the latter part of the week, where obviously some of the bigwigs in Europe will be meeting, and we'll be really finding out what some of these meetings that they've been having over the last few weeks, so what they'll be really doing with some of the problem issues at hand in Europe. And, you know, it'll be interesting to see what sort of market direction and what sort of really stability they can bring to the table in terms of the market and the region as a whole. So certainly keep an eye out for that. That's really be happening towards Thursday and Friday. As regards some of the economic data, I'll just take you through the calendar. Today, this morning, we had the PMI from the UK, which was slightly better than usual. Came out 52.1, expected as 50.6. So we've seen a bit of an uprise in the services PMI. Later on this afternoon, we have the ISM manufacturing PMI and factory orders from the US, which is also consensus to be a slightly better figure. Coming on to Tuesday, we've got not too much really going on. We've got all important Germany factory orders and revised the GDP from Europe. So these are two key features to be really holding out, especially you guys that are looking at some of the European currencies. We'll see how these are coming out. And European factory orders, in fact, look slightly better. So we'll see how these figures coming out. Certainly ones to be keeping an eye out for. Going into midweek in Wednesday, slightly more in terms of the UK. We've got manufacturing production and industrial production early in the morning. So we'll see how the UK FTSE and the UK currencies really react to that. And obviously, we've got the crude inventories, which is a norm for Wednesday afternoons at 3:30. And UK consumer credit, which we're finishing off Wednesday afternoon with. So we'll fairly in line with the US consumer credit. So we'll see how that really sort of pans out. Thursday, as I said, we've got a bit of data in terms of our own bank statements, in terms of any of the official bank rate. Ideally, I'll be honest with you, it's unlikely to be moved. We're looking to stick at 0.5%, and the same with the Europeans as well. So, you know, we'll have a look at some of the dialogue certainly that may come out of the minutes, if they release any after the announcement of the rate. So that's for Thursday. Obviously, the meeting which kicks off on Thursday is going to be important, and really edging off to the latter part of the week. German CPI, inflationary data, and the trade balance to kick off the Friday with, which is obviously going to be fairly key. And these obviously will change throughout the week, but initially they're fairly in line in terms of what they're looking for, and PPI and trade balance for the UK also, and the same with the US. We've got the University of Michigan just to bring the week to a close here. Again, it's going to be the latter part of this week to see some of the dialogue that's going to be filtering through the meeting, which some of these European Union leaders will be having. So keep an eye out for that. Obviously, Wednesday was a bit of a surprise. It serves a lesson to us all, really, in terms of fundamental data and fundamental what's happening. I mean, we can be looking at the charts all day long, but no chart will be giving you that sort of turn, especially with the ones we saw on Wednesday. This is certainly a news-driven market, so keep your eyes and ears open at all times. It's not only about burying your head in the sand and looking at the charts, but you've got to be very much aware of what's happening and what's due to be released out there in terms of a fundamental point of view. So with that, I wish you a good week's trading, and we'll see you next week. Thank you very much.